Okay, so this 50-year mortgage, let's talk about it. Is it genius? Is it insane? Or is it just another tool that's going to help possibly hurt today's buyers? So today we're going to talk about the 50-year mortgage and what it actually means for affordability, your monthly payments, long-term equity, and who this type of loan might actually work for. And then of course, afterwards, I really want to hear your thoughts on it because I hear mixed reviews and people either love it or they absolutely think it's a horrible idea. So my name is Kat Cornish. I'm a local realtor here in St. Johns County, Florida, and I help buyers, sellers navigate through the real estate market here, as well as those who are looking to relocate to the area. And today we're going to jump into the 50-year mortgage and what this could mean for you. So what is the 50-year mortgage? Well, it's exactly what it sounds like. It's a loan that is stretched over 50 years rather than your standard 30. Well, the idea behind it's pretty simple. Longer loan term equals lower monthly payments. Now, for most Americans, they're not even staying in their home for 30 years. Most of them will refinance, they'll move, or they'll sell every 7 to 12 years. So for most buyers, it won't actually mean a 50-year mortgage. It will just help them have a lower monthly payment and actually get to own a home. So let's go ahead and talk about some of the pros and cons that everyone is discussing. Here are some real advantages that economists pointed out. So you have lower monthly payments. Now this is the biggest benefit of them all. So stretching the loan out longer means your monthly payment drops, which may help some buyers finally get into a home and stop renting. More flexibility in expensive markets. So if someone is right on the edge of qualifying, a lower monthly payment might just give them the breathing room that they need. Most people won't actually keep the loan. So as I just said, they'll refinance when rates drop, or they'll just move before the 50 years is up. Now, predictability. So just like a 30-year fixed loan, you're locking in your cost of housing. Inflation might go up, but your payment stays the same. And now the downside, because there are some big ones. You pay significantly more interest over time. Even if you never keep it for 50 years, the amortization schedule builds equity extremely slowly in the beginning. You'll build equity at a crawl. So if that market dips, you're more likely to end up underwater, owing more than what the home is actually worth. And another way of saying this is you'll have an upside down mortgage, which means you owe more on your home loan's principal balance than the current fair market value of the property. You could get stuck. If home values drop and you've barely paid down the principal, refinancing becomes so much harder. It could increase demand without increasing supply, which may push home prices even higher. So buyers might actually think that the product's helping them, but the sellers may be the ones who actually benefit from it the most. So who would this loan actually make sense for? So you might be thinking that this loan might make sense for you, or you might actually hate it, but who does it work for? Well, it works for first-time homebuyers who might need a lower monthly payment to enter the market, buyers who know they won't be in the home long-term, so military families, relocation buyers, stepping stone buyers, people who move every few years, buyers who expect rates to drop. If you plan to refinance later, this could just be a temporary tool to just lower your entry cost. Now, 50-year mortgage probably isn't a great idea for anyone planning to stay put long term. Now, if this is your forever home, you want meaningful equity growth. Buyers who don't like risk. So if you don't like taking risks, then you should scratch the 50-year mortgage off of your list, because in a market downturn, your loan balance may barely move for years. Anyone not financially prepared for the long game. So a longer mortgage only works if you understand the long-term implications. So in reality, I think we can all agree that the 50-year mortgage will not fix the root problem in America. We just don't have enough homes. So until supply goes up, and demand-boosting products like this one may actually increase prices instead of lower them. But I do want to hear your thoughts. What do you think about the 50-year mortgage? Do you think it is a great option for buyers, or do you think it's actually insane? Could it possibly help those who otherwise couldn't afford to purchase a home, or is it just locking buyers into long-term debt? So drop your thoughts into the comments below. I'm curious to hear what you are thinking about it. I have heard some interesting opinions from both sides. And if you thought this breakdown was helpful, please feel free to like and subscribe to my channel. My name's Kat Cornish. I'm a local realtor here in St. Johns County, Florida. So whether you're looking to buy, sell, or just relocate to the area, I will leave my information in the description below. You can call, text, or email me at any time. I'll see you in the next one.